Today's market call is presented by Robinhood. Elevate your trading with Robinhood Legend, the sleek, free, customizable desktop platform built for active traders. While there is no cost to use the Legend platform, there are other fees associated with your brokerage account. See the Robinhood financial fee schedule for more information. Sleek, free, and customizable. 3 words I would use to describe Dan Nathan as he's out there. Where are you? Parts unknown. What are you in, like a?
I'm in Jackson Hole, Wyoming, and it's not
Am
a
I allowed to say
boondoggle.
that? Am I allowed
Of
to
course
say
you are.
that?
You just doxed me, but I'm at an investment conference out here. Can I think of I can't think of a better place to be out
No,
here.
listen, it is
Oh, there it
breathtaking.
is. I took that picture yesterday. Sarah and I did a 9-mile hike around Jenny Lake, a beautiful place. We walked
Sure.
up and saw some waterfalls, amazing views like this. It's amazing. But here we are, guys.
See any moose?
Oh yeah, there's moose just walking around where we're staying.
In
It's
town.
like the
No, the
craziest
moose
thing.
walk around town. And every once in a while, I'm sorry. By the way, Amanda is
Yeah,
great.
yeah,
You can go if you get up early in the morning. There are places where you can go where you might be lucky enough to capture, not to capture, but to see
yeah.
wolves, which have been
Oh wow.
reintroduced. Yes, but that's for another show. Anyhow, it is now 11:02 on the
Anywho,
East Coast. I don't know what it is out there, probably 9:02.
yeah,
And we're
that's
ready to
exactly what
roll
it
here,
is,
Dan
man.
Nathan. By the
Yeah,
way,
yeah. Listen, yeah, go ahead.
yeah, go ahead.
No, I think you were going to say we got a big week here.
We
We
got
had
a
Gene
huge
Munster
week.
drop in the Risk Reversal podcast. You're sitting down with Michael Saylor of
Mm-hmm.
Strategy. That drops tomorrow morning in the podcast, the Risk Reversal podcast. And then I'm speaking to Dan Niles tomorrow. That's going to drop on Friday. So lot
There's a
going
lot
on here,
happening
guy.
here. Yeah, there is. And, we're going to update that XLF trade. We're going to do a
Yep.
little tweak there, and we're going to introduce another trade towards the end of the show. That's a bit of a tease that I think folks will be interested in. So here we
Yeah.
are at 11:02 on the East Coast. The market's been open an hour and a half or so. Market opened higher, trading a bit lower. I think we made a new all-time high in the S&P at 63.02. Here we are now. Now, the headline of the day was the CPI report that came out, which some people say was benign, other people say was a little hot, was starting to reaccelerate. Yep, whatever. I mean, I'm not going to sit here and try to interpret what that was or what the market thinks it was, but the overriding, I think, security that's sort of addressing all that comes into form, and we can pull up a TLT chart, Jacob or Steven, and you can see what's been happening since we opened. The TLT opened higher. It is reversed lower, which means yields that had been on the rise over the last couple days continue to rise. So that's a longer term. If you do shorter term, you'll see. I think, Dan, my view on the subject. I think the TLT is headed towards the lows that we saw back in April. And obviously, I think we're headed towards levels that we saw in the fall of 2023, which is about 82. And today only sort of galvanizes my view.
Yeah, and again, I think it's interesting. No matter what publication you were looking at, there was some different views about whether it was in
Right.
line, whether it was benign, whether it was hot. The fact that 0.1% you know what I mean, could actually be the sort of thing that people are gonna, you know what I mean, like kind of I don't know, like just debate, you know what I mean, whether it's important or not is very interesting. I mean, I think, expectations were 0.2, it came in at 0.3, who knows. But let's pull up the dollar too, Guy, because I think it's interesting that you have the dollar moving, let's say the US dollar index is up 45 cents or so, but you see what's going on there. That $98 range in the Dixie, was kind of support over the last, call it month and a half or so. So that's moving higher. Yields are moving higher. That is the sort of thing that you would expect to move together, right? And so it'll be interesting as we get closer to this kind of August 1st deadline now. And that's really, if you put these two pieces together, is like, okay, if those tariffs are enforced, then the expectation would be inflation readings start working themselves into the data, because that has been, I guess, there was a Fortune article yesterday, I think we highlighted on the market matrix, like that's been the big mystery. Like, where's all the data about inflationary sort of stuff? And you can make the argument, okay, a lot of retailers or a lot of importers, they kind of front end loaded, right, their imports to avoid these sorts of things. So they haven't really had to pass anything through or take a hit to their own margins. So that's the debate for the next few weeks.
No doubt that will be. And again, the market is, well, I think if you watch non-financial news networks, and they're talk about the tariffs, they're talking about how, it's a tariff against Russia. But what really this is, in my opinion, is sort of these secondary tariffs. And, they probably, to me, the impact is more in terms of U.S.-China relations, because, what they're really targeting are countries that are buying oil specifically from Russia. And, I don't think the market is fully comprehending that, this has the potential to, and I say potential because who knows, but, to impact U.S.-China relations. And listen, at a 17 VIX, my opinion, I don't think that's being priced in, but, we'll see how that whole thing plays out. I mean, the headline today, obviously, other than CPI, is JPMorgan. But before we sort of delve into that, let's take a continued look at this KRE, because Carter and I have talked about it. You talked about it with me over the last couple of weeks. The underperformance there, to me, although again, like many things, has bounced since April, but not nearly to the extent of the broader market and not nearly to the extent of these major banks. That's something that I want to continue to look at, because I will say, along with the Russell, and they're sort of part and parcel, very economically sensitive.
Yeah, I mean, the other thing, you could take a look at this and say, okay, it had that breakout a couple weeks ago above the 200-day moving average. It's consolidated over the last week. I think if you're just looking at the, the results of JPMorgan, you had Citi, you had Wells Fargo, they're kind of divergent a little bit. I mean, Wells Fargo missing on net interest margins, but JPMorgan beating on them. I think that's worth kind of keeping an eye on. Wells Fargo down 5.5%, guy. That's kind of a big move. Citi, which was up 3.5%, up a little less than 2%. Give me your take on the large money centers. They don't like how they act today relative to expectations, and then we can kind of go back to the KRE for a second, because none of those names have really reported yet.
Yeah, well, nobody here is going to care about what I'm about to say, but what I will tell you, and I know what before, right after the market opened, what I said to you is, it feels as though JPMorgan is going to open higher and then spend the rest of the day sort of ratcheting lower. And we have seen this before, so it's not like I was Kreskin or anything like that. I mean, that's seemingly what's been going on with these large money center banks. You have a run up into earnings, you have a subsequent move higher post earnings, and then I think it's sort of a sell the news type of event. And that's what we're seeing here in terms of JPMorgan right now. The average volume, I think, in JPM is about 9 million shares. You can see what it's traded already. There's a chance that, with today's price action, not only in the individual names, but in the broader market, you start to hear people talk about the potential for a bit of a reversal. Again, a lot of time left, 11:08 on the East Coast. So we have many hours left in the day, but these are the types of days that you're looking for. This is the price action I think you're looking for if you're trying to ascertain whether or not we're reversing or we're turning in different names or the broader market itself.
Yeah, and back to the banks for a second. So they've turned down. I can't think about, guy, like too many catalysts and why they would kind of turn, unless the S&P just started raging again, unless some of the data that we start getting, kind of speaks to a better than expected economy. I mean, everything that JP Morgan printed, whether it was net interest margins, whether it was fixed income trading, whether it was investment banking, it's all looking pretty good, right? So in a difficult environment, I would say definitely in Q2. But you and I last week, we put on a bearish trade in the XLF. We were really kind of focusing on some of these big money center banks, right? And that was the reason why we targeted. We know that Berkshire Hathaway, and for years, guy, we've been saying that weird ETF, Berkshire's the number one holding. But when you think about the underperformance of Berkshire, that was one of the reasons why we had a little bit more confidence of putting this trade on. So let's just kind of flash up what this trade was from last week. And again, targeting these sorts of, earnings that we got over the last, here, let me just pull this up so I can see what we have here. Sorry. Yeah, so at the time we were looking at the 52 put. It was basically at the money, and I just want to go to the legend. Maybe I can drive for a minute here. So if I look at, let me go to the main page, and we can look at this chart of the XLF. Here you are right here. I mean, this was basically a nice little consolidation that we had, Guy. We broke out. We got to the prior highs going back to March. Let me just do a kind of year-to-date chart so you can kind of see what's going on here. Maybe that's double top-ish. Here's the 1 year. And, we could draw, a pretty easy sort of uptrend off of those lows that we had in April. And so we were playing for the idea that it would challenge that uptrend and then kind of break, and maybe we have something below 50 or something like that. So you and I at this point, so let's go look at those at the money 52 puts right now. They were in July expiration. That's this Friday. All right. So we paid 46 cents for those. That meant there was a break even at 51.54. And if I want to navigate this, I can just go to the at the money by hitting that little thing it shows you right there. So these were 46 cents. Right now, they are basically 33 at 35. You and I want to roll this trade out to August. We think that there's going to be, some further downside, especially as we get through bank earnings. And then again, not that the KRE, that's regional banks, but it'll be interesting to see what they have to say. And that might kind of weigh on sentiment as far as financials in general. So, Guy, if we want to look to August expiration, so I'm basically at the 52 put in July, expires on Friday. I'm going to kind of construct this trade here. Now I'm going to go to August expiration. That's August 15th. And I'm going to look at the 52 put there. That's offered at about 97 cents. So I'm just going to click on the offer right here. And so right now I have a roll. I'm selling to close the July 52 put at about 34 cents. And I'm buying to open the August 52 put right there. It shows for about 96 cents. So you can do the math on that. It's 62 cents. It's what's going to, so now I'm going to kind of move this up higher. We had 25 lot on the contracts. Bam, bam. Okay. And now I'm going to look at 62. I'm looking right over here. I can see it's 62 at 63, and I'm buying this. So I'm just going to put it in at 63 cents. And there you go. I'm executed. So now we sold to close the July 52 put, and we bought to open the August 52 put. And we're basically giving us some ourselves more. Right? Makes sense to you?
You're buying time, and what we're saying is, and you can speak to this as well, you have your initial sort of catalyst in the form of these earnings, and I think that sort of cements the view that we've had that maybe it's going to be a sell the event type of thing. You can make the argument that maybe we put this thing on a day or two too early, but I mean, that's just trading. There's no way to you only know that in the rearview mirror, right? But, here we are. So I think what we're saying is, okay, we had that initial salvo. We think our premise, we think our thesis is still right, and we're going to buy ourselves a little more time going out to August, which to me makes a ton of sense. I mean, that's just me. It makes a ton of sense, especially given the views that we both share.
Yeah, and I guess the other thing, just to kind of refresh here, like when you're buying, premium, right? In this situation, we're buying the 52 put, right? And so with implied volatility in the underlying stocks that make up that ETF, pumped into their results, that also works its way into the XLF that they are obviously components of. So you get three of the big ones out of the way, you're going to see vol come in. What does that mean? If you're long, the options, in this case puts, you're going to see them compress a little bit in price. And obviously you have time decay too. So one of the reasons why holding this and trying to play for the break even by Friday's close is just not a great bet here. Time is not on your side, right? And so that's what we're doing. To your point, we're buying ourselves some time. Guy, I just want to pull up this JPMorgan chart for a second, because this is one, before we were thinking about rolling the XLF, we were also thinking about playing this thing for a move below 275. That breakout level was really, really impressive. It basically checked back to the breakout level. Here we are now. We're probably midway between that sort of breakout and the highs that we just saw. Is this one best of breed, obviously, that you'd be willing to play for a move back to, I don't know, 270 or something like that?
Yeah, the short answer is yes. But with the disclosure that I've thought JP Morgan's expensive for a while. I think the February high is like 275 or something. I'm doing that off the top of my head, but I think I'm pretty close. So
Yep.
I don't think it's unreasonable to think you get a back and fill to the prior all-time high made earlier this year. It makes a lot of sense. And then we'll see what happens if and when, as Carter would say. But it's clear, look, best of breed without question. Do they deserve that kind of premium valuation in terms of price to book or price to tangible book? That's something that I've sort of struggled with for quite some time. But with each passing day, as we get more and more rich in terms of those two metrics, and then you have this event today, and again, a lot of time left. It's trading. What are we trading today? I think 287 and change, down marginally on the day, 0.4%. We'll see how this thing closes, but there's a very good chance that a week and a half, 2 weeks from now, as we get into August, we go back and say, remember that Tuesday when JPMorgan reported, that was the turn.
Yeah. And it's interesting. We started with CPI this morning, then we went to bank earnings, and there's another big piece of news for the sleepy summer period that you'll often hear about from a trading perspective. There's a lot of news today, and I would expect it's going to continue to go. Another piece of news that broke last night, Guy, is that Jensen Huang, the CEO of Nvidia, has been lobbying the White House pretty hard, right? So we had these export bans on some of these Hopper chips. This is going back at least a year. This is the high-end GPU, and the Chinese were buying these things, hand over fist. By the way, just like our cloud companies over here, the hyperscalers. And then when it was deemed to be an issue of national security, but also a piece of leverage that we might have with them over this kind of trade dispute. And this trade dispute is, prior to this administration and going back to the first administration, this has been going on with China for a long time. I think everybody can agree that it makes a whole heck of a lot of sense that we are not sending them our best technology. And I think Jensen Huang and Nvidia, they basically rejiggered some of these chips, and they basically are the H20, down from the H200 as far as capabilities and the like. And Jensen's argument, Guy, I think it makes a lot of sense. Okay, he's basically saying if our chips are not being sold into the Chinese market, then we have the potential to cede that entire market to companies like Huawei, who are making their own chips.
Right.
And so, talk to me how you think about that, because it's easy to be cynical and just say, you know what, this is the Trump administration caving in to a guy who's been lobbying. I don't see it that way. I think that they've been really thoughtful about this whole thing.
I don't think it's a cave. I mean, listen, I think we're pretty vociferous when we do see caves. I think in this case, I think it makes sense. If you create a vacuum, if you create a void there without allowing us to sell the lower end chips, they're just going to fill it themselves, and it sort of defeats the purpose in terms of what we're trying to accomplish here. So let us sell into their market a sort of watered down version. We can continue to sort of squeeze the competition out to the extent that that's possible, and everybody seemingly wins. So I think it is good business, and to a certain extent, you give credit to the administration for seeing it the same way. I mean, so there's a lot of horse, what do they call it? Horse trading going on here, and I think that's what we're seeing, and that's what the market is trading on. But with that said, look at what we've seen in Nvidia. You see this gap open higher to new all-time highs. I think the stock, which trades about 210 million shares a day-ish, I believe, and I'm looking at my phone. Yeah, that's right. Probably has already traded about 140 million shares. So we're on course to trade maybe 2 times normal volume-ish if we get a sort of push at the end of the day. Keep an eye on today's trade action, because we have seen this before, Dan.
Yeah, I mean, the question we get all the time is, you had this breakout above the prior highs. It looked like it was going to be a double top-ish, just from a technical standpoint. This is one where people think that the estimates for earnings and sales are too low for this full fiscal year, and then going out another, you're seeing, earnings this year expected to grow 50% year over year, revenue growth, 54%. Those margins that people have been really focused on, right? Because they kind of guided them lower from the high 70s in a quarter. I think it was, it was 79 Q1 fiscal 2025. nearly 79% gross margins. This year expected to be about 71 or so. So if you see a reacceleration in that, you have a stock that's trading at 39 times fiscal 26, 29 and a half times fiscal 27, and there's argument to be made that it's cheap. I just don't know how this move is sustainable. I think part of the focus is in the last quarter, I took a $5.5 billion charge because of the sales that they were basically relinquishing in the prior quarter guide. So the idea that there might be a very big catch up if companies over there are looking to kind of get as many as they can, especially before who knows how long this trade dispute comes. Now that you reopen that market for them, then it really does become leveraged to some degree.
No, listen, 100%. I mean, as we've now surpassed $4 trillion, that price to sales ratio that we've talked about for a while gets back the wrong way. It started heading the other way again. I mean, it is rich without question. The optimist is going to say, you know what, you're looking at the wrong thing. They're going to absolutely grow into that over time. So, I think you're talking about a company that, if you look at it, what are they expected to do? Maybe somewhere between 275 and $300 billion in revenues. You can start to do the back of the envelope math. And you could say that, historically, still pretty expensive in terms of that metric alone. People will look at price to earnings, very reasonable, and that's a function of the margins, which are, mid 70s. So if competition were to come in, we've had this conversation, this is how it plays out. Price to earnings, reasonable. They're out earning their revenue stream. We've said that before. How do you what happens? Like, what's the sort of switch that goes? The switch is if margins start to contract, that's when your price to earnings starts to sort of get more in line with what a price to sales number that's just, in my opinion, outrageous. So that price to earnings, which is cheap, all of a sudden on the back of margin degradation or deterioration gets pretty expensive.
Yeah, the price to sales thing is really interesting because, expected to be like 21 times this year, 16 and a half next, and the second largest market cap company in the world, which is Microsoft. And you could say, well, it's kind of apples to oranges, like Nvidia is a hardware company. Well, if you made that argument, then they should not have a higher price to sales like that, in my opinion, because the recurring nature of the revenue for like a Microsoft, but then there is that recurring software revenue with CUDA at Nvidia. But, in Microsoft trades 13 and a half times sales and 12 times next year. So for whatever that's worth, I think you point out, and I think it's important to kind of show, like some of those disparities, but Nvidia is also growing much, much faster than a Microsoft. And so that's kind of, I think and
they're being rewarded for it,
Yeah. Hey, what do you think though? And we've been hearing this again and again, like about an AMD, right? So AMD today is up a lot, and they don't really have a competitive chip in China. Maybe they do better on the low end, which is what's going on here. But AMD, obviously, you see this move, and maybe Jacob can make it a 5-year just from a technical perspective. But is this getting ahead of itself here?
It is, and it's happened before, by the way. So I think, and please correct me if I'm wrong, but I think the all-time high in Nvidia was in the spring of 2024. So last spring, and I think it was north of $210 or so. Then the stock proceeded to basically get more than cut in half. I mean, at its low this year, I think we were trading in the mid 70s, if I'm not mistaken. So now we've doubled from the lows. So, I mean, pretty dramatic move. But to your point, is it getting ahead of itself? Well, it's catching a bit on the back of everything else. It's getting dragged up with the space, and maybe rightly so. But, I think there's going to be this sort of day of reckoning, as we have seen before with AMD, and we've seen it a bunch of different times. I mean, you go back and look at what we saw even in July of this year, Dan. I mean, last year, when the stock went from 172 basically to 132 in a straight line. Then we bounced back to 170, and then pretty much in a straight line traded down to 75. So you let this thing play out a little bit, but it's going to run out of steam, and I think it's going to run out of steam somewhere between 165 and 170.
Yeah, just to put some context around expectations, especially after this big move, they're expected to report on August 5th. I'm looking at the August 8th expiration. Stock's at 155 right now. And it's basically a 17 and a half a 17.5 implied move between now and then. Maybe I can do some quick math here. 117 or 17.5 divided by, this is kind of just,
So it's
rough.
15 plus about
155.
11 is
Yeah, it's about
$27.
Yeah, so it's about 11% in either direction. That's the expectation between now and August 8th. So by the time you get to earnings, the move will be, yes, there's CC Johnny on the spot. Will
Yeah.
probably be about 7% or so. Just on the technicals, guy, that looks like it's forming. Maybe you and Carter can talk about that on Thursday. What could be a really monster like head and shoulders, and then you see where that neckline is down there. But again, I think this is a company that's likely to disappoint, especially the way in which it is moving into its earnings. And granted, there's a lot of time left between now and their earnings, about 20 days or something like that.
What's been both disappointing and rewarding since the fall of last year, and that's some of these Chinese stocks. And, the trade that we sort of teased earlier in the show comes in the form of the KWEB, which is getting back on its horse. And here's some of the components. We talk about these names all the time. The name that I obviously continue to go back to is Alibaba, the B in my tube, as you know, which I think recently traded down to 104, having traded up to 140 earlier in the year. But, rightly so, I think these names are getting back on their horse, and we have a trade sort of around that, Dan.
Yeah, and I guess one of the reasons we're looking at KWEB, if you look at Alibaba, if you look at Baidu, we talked about Baidu a couple of weeks ago, about a week and a half ago on Fast Money. And to me, what seemed really interesting about that is like Alibaba, Baidu, they have cloud businesses, but they're also working on models, right? And so when I think about their demand for these Nvidia GPUs, despite DeepSeek, despite what they're saying about the performance relative to the chips that they're using in the training and that sort of thing, look at how these stocks are trading today. Baidu's up nearly 8%, Baba's up 6.5%, PDD is up 2% or something like that. So when I look at the KWEB and I say to myself, and you just said it kind of interestingly, it's been rewarding and it's been disappointing. That's a huge base right there. You see that flattening 200-day moving average, right? So the trade that I want to look at, Guy, and you and I were talking about it before, and we like the idea of playing for a breakout towards those prior highs. The ETF is trading about $35. We want to be play this with defined risk to the upside. So maybe Jacob will let me drive on the legend here. I'm going to leave the XLF. I'm going to go to KWEB. And we're targeting that sort of 35 level where we want to kind of, really put a risk floor in right there. So with the KWEB trading at about 35.20 right now, I want to buy the 35 call, and I want to look out to that sort of resistance level up there at 39, right? So here I'm going to do this. It's going to be August expiration, August 15th. I'm going to go the at the money here. And let's look at this 35 call. It's offered at $1.42. And I'm going to look up to that 39 call. I'm going to create a call spread here. I'm going to sell that for about 30 cents. So this is going to cost about $1.09, and I'm just going to do a 25 lot here. That's our kind of number as we're trading on the legend during the live show here, and I'm gonna execute that. So if it's going to cost me about, well, I don't know, the way we wrote it up is about $1.05 right here. This is my max risk, right? I have profits between 36.05 because it's the strike, the 35 strike, and basically the $1.05 in premium that I paid. So I have gains of up to $2.95 between 36.05 and 39. My max gain is at 39. I like the risk reward here. Basically, I'm risking one to make three, and that quarter wide of this call spread seems to be the sort of thing, and you'll hear us talk about this a lot. That's a good relationship right there.
I agree.
Okay?
And that the risk reward is right. And I'll tell you, in terms of the levels, 39-ish is sort of the high from the fall of 2024. That was October. You go back to, again, earlier this year, I think it was March, mid-March or so, we traded up to 39 again. That coincided, by the way, with the moves in Alibaba for obvious reasons. They both fell off a cliff. And now we're getting back on its horse. So I think it's reasonable to think Alibaba recaptures somewhere between 135 and 140, and KWEB recaptures sort of this 39 level. And then the question is, what happens if and when you get there? Because if this thing starts to accelerate, you're going to look at KWEB and say, wait a second, this has been flatlining since 2022. you can be finally looking at a bearish to bullish reversal, but we'll sort of cross that bridge when we get to it.
Yeah, no doubt. And so what I also like about this is that the at the money sort of situation here with this call spread is about a 3% break even to the upside when you're looking at the way these stocks are moving, if that is a continuation here. And you might have some folks say this was a big overhang for some of these Chinese, names that are building out the models. And so this kind of releases that a little bit. So I expect some follow through. You expect some follow through. And the risk is really this $1.05. It's about 3%. So I like the risk reward here also. And so that's a an area we're going to keep a close eye on. But to your point, we also want to keep a close eye on a lot of these semis, because if they do start to give it up, it doesn't feel like that Nvidia is going to give it up today. But Taiwan Semi is also raging. This is good for Taiwan Semiconductor. So again, I think that's definitely worth keeping an eye on. Guy, do we want to take a few questions?
I do, and I want to put the mountain picture up whilst we do this, because it's very soothing to me. So one of the questions comes in the form of Gary Webb, and he's asking about the weakness in the yen against the U.S. dollar. What I'll tell you is 10-year JGBs are the highest we've seen, I believe, since 2008. 30-year and 45-year treasuries or bonds or whatever they're called in Japan are at an all-time high. Yields are going higher in Japan for the wrong reasons, and their currency is weakening as this happens. I mean, this is sort of the opposite. Well, I mean, not the opposite, but this is sort of the United States, except that our currency is weakening as yields going higher. Japan has a problem. So danger Will Robinson here. I don't know what the currency move, I don't know how it's going to play itself out, but before our very eyes, you have things in the Japanese bond market that our market is not taking into consideration, maybe around the edges in terms of where 10-year yields are. But if the Japanese bond market continues to sort of trade the way it's trading, I think it's just a matter of time before global risk assets start to feel some of that pain. That's just me, and I know you don't necessarily want to opine on this, but that is out there.
Yeah, but here's the deal. A year ago, exactly, you might have said the exact same thing, and it only took
I probably
a couple
would have
weeks
said the
for
same thing.
No, but I mean, it was dead on. It's just interesting that here we are now. We had that, that really, I mean, you could call it whatever you want. I mean, that was a bit of a haywire market action across multiple different asset classes. It reminded us a little bit of what happened in April, but we didn't have that sort of drawdown in equities to that extent. But you were having an unwind of that carry trade, and it was amazing, Guy, how quickly people just went back to it. You know what I mean? After we had that little bout of volatility in early August, late July.
Are you a Laurel and Hardy fan by any chance?
No, I know you got to watch it first run. Used to pay a nickel and get into the the movie theater and see those guys.
That's true. That's what we did. I mean, that's all the money we had. We'd save up for weeks. But March of the Wooden Soldiers is a great Laurel and Hardy movie. I don't know what time of year it's played. I want to say it's typically around some holiday. Maybe it's Thanksgiving. With that said, outside of Laurel and Hardy, one of the protagonists in the movie was somebody named Tom Tom. With that, I give you the following question from Tom Tom. And he's talking about Alibaba. And there you go. Looks to have bottomed out. Well, Tom Tom, you read our mind because we just opined about exactly that. See what I did there?
Yeah, I do.
No, you don't care. Right. Okay. This is from C.R. Taylor. Newmont overreaction. What he or she is talking about is the move to the downside. And my answer to you is, unfortunately, yes. We have seen this before. What is amazing to me is how quickly market participants will hit the sell button in gold mining stocks because they've been smoked so many times. They do not get the benefit of the doubt whatsoever. So we've seen it before. I mean, you go back to the fall when you had that line job on the back of earnings to the downside, and it did not recover until earlier this year. And, here we are again. It's like we've seen this movie before.
Yeah, Guy, I got to get out of here in 2 minutes.
Oh, sorry. Let's go.
No. I just want to hit a couple things that kind of hit my radar. Maybe you want to opine on them. Walmart down, I don't know, a little less than 1%. Target down 1.5%. Costco down 1.5%. Home Depot down a little less than 2%.
Mhm.
What's going on in retail? Because they're all red. The only retail name that I see, at least on my screen, of about 20 that's up is Chewy. So there must be a piece of news there. Retail, CPI, anything there?
Yeah, I think that's part of it without question. I think also there's this again, once again, this move into the broad-based technology, not broad-based, but specific technology.
Mhm.
Maybe it's coming at the detriment to retail, but I will tell you, inflation is a problem, regardless of what you hear people say. I think the retailers are picking up on that. And in terms of Target, and I sound like a hater, maybe I am a hater, but that stock continues to just suck. I mean, there is no
Yeah.
meaningful bounce. And at some point, although it's a $50 billion company, you're going to start hearing about activist involvement, I think.
Yeah, I agree with that. Just really quickly, also pharma taking it on the chin. Even Lilly, there was some good news about some approval on a Crohn's drug up in Canada. Doesn't act particularly well today. And then if you look at Novo, this is interesting, guy, because there were plenty of folks when we talked about on Fast Money over the last month or so, about 2 months or so. I think Tim kind of nailed it at the lows in April. And you had this big move, right, from under 60 just to above 80. And here we are. We've given a lot of that back, and it really feels like it's going back towards 60. So some of the big themes in
Yeah.
pharma are not trading particularly well.
Look at the volatility. I know you got to go, but the volatility in Eli Lilly since last fall, the moves both up and down have been unbelievable. I mean,
Yeah.
it basically we go from 750 to 950 to 750 to, and this has happened a couple different times. So the market is trying to, I think, come to grips with what Eli Lilly is all about, and they deserve it of the valuation on the back of the GLPs. I know you got to run. I'm sitting with Michael Saylor. That's going to drop tomorrow. You mentioned the Annihilators coming on with you. A lot going on. Love the mountains. Love Wyoming.
Yeah.
If you haven't been out west, you should go because it is breathtaking. New Jersey is the most densely populated state in the United States. That's where I'm currently sitting. Dan in Wyoming is sitting in the less densely populated state in the United States. So there you go.
Yeah. And by the way, I took that picture. It's just amazing where we are and with technology, guy. I know that you've been tracking this. I took that with my iPhone. I mean, just think about that.
No, I
Like,
love technology. Yeah.
okay. All right.
No, I do. I
Big
mean,
day.
Ansel Adams had an iPhone. Think about what he could have done. It would have been beautiful.
You know, Guy, I just want to say one thing about what I'm looking at in the market today. Let's just say that piece of Nvidia news did not come out. I would say,
Can you crop out the sign on? Can you put that back up?
no,
By
but
the way?
I could do, but like part of that, I thought it was cool because they basically have signs saying this
No, they do.
trailhead. There
They
we
do
are
have
in
signs.
Teton
A lot of
National
places
Park.
have signs.
I don't
Yeah.
know. Wait, what's the line about the moose? The this line. I mean, this is a classic.
Moose out front should have
movie.
told you.
Yeah, moose out front should have told you. That's National Lampoon's Vacation. What are we talking? Maybe like 1983 or
It's
something
just
like
tremendous.
that.
Parks
John
closed.
John
Moose out
John
front should have told you. Yeah.
John Candy. Pretty
Yeah.
amazing stuff.
Marty Moose.
But without the socks up here. Okay, I'm looking at retail, I'm looking at home builders, I'm looking at pharma, I'm looking at financials. So tech only has a bid right here away from Chinese tech. Obviously, well, that's related because of that Nvidia news. So it really tells you that the market continues to just be on the back of this AI trade. And like sooner or later, like something's got to give here, don't you think? Because especially just before we get out of here, put that Nvidia chart up again. Think about how much market cap it has gained since the April lows. This is
I think
kind of
$2.5
unnatural
trillion. I
stuff.
think $2.5 trillion, maybe less than that, but something like that.
Yeah,
Right?
it's nuts. All right. Well, you heard it from us. Check out the Sailor interview. We can't wait for that one. That drops tomorrow in the Risk Reversal podcast feed. Thanks, everyone.